Back with us on Chartbusters, the Nifty at the highest point of the day now, 170 points higher, led mainly by FMCG stocks. But we continue with our corporate conversations. Indegene is the next management on our show after a muted quarterly performance. It was an 11% gain in its profit after tax, but it was almost a 12% dip in its EBITDA numbers. We've been joined by Suhas Prabhu, who is the Chief Financial Officer of Indegene, who is discussing here the quarter gone by. Suhas, good morning. Thank you for joining in. You know, your revenue growth on a sequential basis was muted, but the EMS business is the fastest growing for your company. Does that remain the key growth driver going forward? And what do you expect to end FY25 with in terms of revenue growth, profit growth, and if you could give a margin number as well?
So once again, thanks for having me on your channel. And as you rightly mentioned, coming off a quarter with a strong sequential growth of 4.9%, proud to say that we have achieved a significant milestone of crossing 700 crores in revenue for the very first time on a quarterly level. And also a strong performance on the margin with EBITDA north of 150 crores and PAT also north of 100 crores with a very healthy 15.2% PAT margin. And as you rightly observed, the EMS business has performed strongly. This is coming from a momentum that we are seeing largely, I would say, not entirely, but largely out of customers whom we classify as mid-tier customers. And by mid-tier, we mean outside of the top 20 globally ranked biopharma companies. And we made significant inroads in that over the past few quarters now. And that is reflecting in a higher rate of growth in the EMS business. But having said that, the strength is demonstrated across all our segments. Even our ECS business has grown sequentially, even omni-channel activation and the smaller businesses which are aggregated as others have all grown sequentially. And we believe the momentum is being seen by us, not just in the enterprise medical solutions, but across the board. And coming to the customer segment, while currently the performance of the mid-tier segment is reflecting positively on our results, we still remain very positive given our traction, given the pipeline in the top 20 customers as well. But given that they are larger enterprises, these are more transformational deals. The time to conversion,
Suhas,
the time to go live.
Sorry to cut you in, Suhas. We are running out of time, so just wanted to get a few things out of the way. You know, your top 5 client concentration has reduced on a year-on-year basis from 46.5. You've brought it down to 40.3. Do you see that trending further down as well? Very quickly, if you could tell us.
Yes, in the near term, we would see that trending down. But as I was mentioning earlier, we still remain bullish on the top 5 and our top 20 customers. And while it will take a little longer, we see that also growing in tandem and coming up a couple of percentage points in the medium term. But in the near term, we would potentially see that going down.
And what about growing other businesses beyond biopharma? Because almost all of your revenue comes from that segment. Your 94% is almost everything, right? We're planning on growing other segments as well?
No, we remain focused on life sciences. So it's biopharma, med devices, biotech, and that ecosystem. It's a large area, as you understand. The industry is more than $1.8 trillion. The spends are large. So we believe we have significant headroom to just grow within this segment. And this remains our focus segment for the near future.
Right. All right, Suhas, thank you so much for sparing time and joining in. Running out of time, so it's a short conversation, but wish you good luck for the year ahead as well.
Thanks again for having me on your show.
That is the management there of Indegene, the stock at the flatline currently after its results.